kind of just unveiling the company, I want to just get a gauge of how many people are actually familiar with Prince Silver. I see Scott Gibson. Anybody else? There's a few people here. Well, I will take a measure. I took a mental note for when I'm here next year. Hopefully there's going to be a lot more hands raised by then. Yes, I will be making some forward-looking statements. You can read this on our website at your leisure. And so I came from a group that was backed by B2 Gold, and we had a lot. Well, it was terrific to have that backing. I see Prospector Metals also had that backing at B2 Gold. And it was a terrific position for me to have been in and to learn in that environment. But when I was proposed this opportunity to join Prince Silver, it was basically a no-brainer for me because of at least these 4 reasons. And there's way more, but I'll just talk about these first 4 reasons. So number 1 is it's not a grassroots project here. We have a proven asset, and we're basically just trying to build it up and see how big it's going to get. It was fully funded when I came on board, and actually just last month we topped it up. So we are now sitting at around $8 million. So we're fully financed to do our drilling for this year. And we have a clear path to a resource estimate, a 43-101 compliant resource. And that's because it was a past producing mine, but we have 130 holes of historic information. That database is going to be combined with our drilling that we're doing right now, and that will give us a head start on getting that 43-101 compliant resource completed later this year. What I also really like about this particular project is it has a whole bunch of metals, a basket of metals, 4 of which are actually included in the critical minerals list in the United States, and that could prove to be quite interesting and helpful for us because, as you may have seen with some other companies, if you get that type of backing from the U.S. government, it does wonders for your share price, but it also gives you non-dilutive financing. So Prince Silver here, we have what we're calling a modern bulk CRD opportunity. As I said, it was a past producing mine. And in fact, if you look at all those little pickaxes, basically those are all historic mines. So the area was covered in mining up in the early 1900s. And if you put all that together, just to give it some context, you're looking at about $5 billion worth of metal that was produced in this area. And it's not a huge area. And we have what's called a carbonate replacement deposit for all you non-geologists. It's also known as a CRD. And what they're known for typically is for their size, their continuity, and metal diversity. And that's exactly what we're seeing here at Prince. In particular, we're seeing like that metal diversity, which I said has those critical minerals that are included in the critical minerals list, which I think could be valuable to us in the future here. So this is an early photo. This was circa 1910. This wasn't actually the Prince mine, but that's basically what it would have looked like if you were producing in the early 1900s. So as you can see, it was pretty primitive. And so they would have been chasing just high-grade veins. So usually it would be a vein that you could see and you'd chase it along. But what the opportunity is they would have left a lot of the lower grade material up near surface, but also what they left was down at depth. And that's what we've been drilling on lately, and we've been hitting so far. Just at the Prince mine alone, you know, it wasn't huge production, 3.6 million ounces of silver, but at current price or even close to current prices, you're looking at $600 million US worth of metal that was just produced in that small mine alone. So this is just an aerial view of what it looks like at the Prince property. And happy to give you guys a tour at some point. I think Chen's going to come down in a month or so. But this is what it would look like if you come down in the summer. And you can see there's a head frame here. And what you might not recognize are these little holes here. They're not open pit mines. This is just actually a collapse. So what happened was we had some underground mining drift here, and it basically collapsed down. And what that gives us is a glimpse into what it looks like underground here. And it was actually perfect for a non-geo like me to see this, a carbonate replacement deposit. You have what's limestone, and then it was replaced by this manganese silver oxides right in here. So even for somebody who's a non-geo like me, it's really easy to just look at it and say, oh, okay, that's where the mineralization is. So it's very close to surface. And at depth, you're going to have at least two mineralized layers in the sulfides. So What helps me kind of sleep at night is we're backed by 27 years of historical production, but we have that historical drill database, which is going to be really important to get that resource estimate. So when I started, we were already drilling, but we hadn't put out any results. And thankfully, I have to say the first set of results were exceptional. So here's just some examples. We had the first hole here is 1,300 grams per ton silver with 14% manganese over 3 meters and not too deep, about 186 meters of depth. Second hole, we actually had more gold, and that was further down at depth. And that's what I was saying. That's kind of the untapped area. We're hitting 4.78 grams per ton gold, and then 355 grams per ton silver. So right now, we're just focused on that resource target ellipsoid area here. I didn't put all the drill results on here because it would really cover it up and you wouldn't really be able to see what's going on. But these are just some of the historic holes as well as the holes that we've just put in this year. So again, that's all going to be combined into this 43-101. So we liked the drill results so much earlier this year that we ended up doubling our land package. So just a month ago, actually less than a month ago now, a few weeks ago, we acquired all this new green ground here. So we started off with this patented and unpatented ground down at the south, and we just staked up all this green property. Why did we choose that particular part of the ground? This is called the Great Western Fault, and the Great Western Fault would have been that fissure that would have let these hot metal or hot fluids rise up to the surface, and eventually make these mantos that we're now trying to find. So looking ahead, as I said, we are fully financed, and we have two drill rigs on the ground right now that are turning. These are RC drill rigs. It's quite cheap, quite fast, and it's going to start delivering more results. We had our first batch of results last month. I was hoping we'd have some results for this conference here, but it looks like it'll be maybe another week or so before we get our next batch of results. But that's what everybody I think is waiting for, is to see if we can prove out that we have this resource, continue to prove out that we have good drill results, and I think we will be able to deliver on all of that. On top of that, because manganese can sometimes be a little bit of a challenge with recovery of silver, I'll be upfront with it. We have already started to do metallurgy work, and that started as of late last year. We're hoping to maybe get some results out later this year. We're using the same lab as a company called Aftermath Silver. Aftermath, as you may know, also had silver and manganese there, and they were able to solve that riddle. So that's what we're trying to do here. So we've started early. We're hoping to have some results later this year. If not, it might be the following year. And then I saw that the Epic Gold's used something similar. How do you evaluate these companies? If you want to take a look at a crude metric, you can look at enterprise per silver ounce equivalent. And this is just an example of some of the companies that are out there that are pre-production, have resources, and have already gotten that lift after they got their resource estimate out. And so the average is about $2.37. That's US per ounce. So we have a target of between 25 to 43 million tons. That's roughly going to be about 75 to 150 million ounces of silver equivalent. So even if you're rough ballpark, say you're 100 million ounces of silver equivalent, you could do the math pretty easily and see that we're quite undervalued at today's prices. So again, that U.S. critical minerals leverage, I think, is going to be really important for us as we move forward. And you can see just some of these examples. Some of you might be shareholders of some of these companies. You have Titan Mining, Trilogy Metals, Ucore, and South 32. They all got a good push in their share price, but also they got this cash influx from the U.S. government. And so if we can tap into that, I think we're going to be in really good shape. And lastly, I'll just say that, we have a tight share structure, which is going to give you some torque on the share price. We have 59 million shares outstanding. We have $8 million in the bank right now, and market cap sitting around $45 million. We have no debt. Some of our key shareholders are actually in this room right now. Brian London would be one of them, Chen Lin, a few others. You might know Jeff Clark and Peter Spina. So we do have that coverage from some of the newsletter writers, and I encourage you to speak with them or speak to me later on outside in the hall there. And lastly, I'll just say that we do have a very experienced management team. Maybe I don't look it, but I have been around for over 20 years in the industry. And Ralph Shearing is helping me a lot with being the president here. So we've taken projects from exploration into production, and possibly we'll be able to do it again here. And if you have any questions, again, we'll be out in the hallway. Thanks.